invest in and follow principles. That has proved to be pretty successful.
This landlord's gonna make almost $2 million over the next 12 years for doing something one time. And that's like residual. This guy's got another 7 retail spaces and he's got 10 stories of apartments above it. And I'm like, man, I'm on the wrong side of the coin, right? I need to own real estate, not broker it.
You start doing deals that are absolutely life-changing, like that put you on the path for intergenerational wealth.
Welcome to the Real Estate HomeRuns podcast. I am your host, Louis Van der Horst. This is a podcast for busy professionals who want to learn about passive income producing strategies that have helped others crush it in the real estate world. Whether you are a new or seasoned real estate investor, this is the podcast for you.
Hello and welcome to the Real Estate HomeRuns podcast. Today's guest is Trenton Bussey. Trent received his bachelor's degree from Louisiana State University and then went on to get his MBA from the University of Louisiana, Lafayette. He then went to join the Navy as a chief financial officer. After a quick career there, he went on to get a W-2 job, which he still has today, and started investing in real estate on the side. Throughout his career, Trent has overseen the construction and renovation of over $20 million of residential and commercial real estate. In his spare time, when he's not pursuing real estate ventures, Trent enjoys spending time with his wife and 5 kids, playing golf, and indulging in LSU Tigers and New Orleans Saints football. We're excited for you to listen to this episode about Trent's first apartment syndication deal. Welcome to the show.
All right. Welcome back to the show, everyone. Today I have Trenton Bussey. He's joining me in this virtual podcast studio. He's got his setup. I have my little setup here. Trent, thanks for joining me.
Yeah, definitely. Thanks for having me.
So tell us a little bit about your background. I know you just completed your first general partner deal. That's awesome. You have dabbled into different things in real estate. Tell us how you got started.
Sure. Yeah. So I've been at this about 4 years doing different types of things. So I was in the Navy. I was a naval officer. That's where I met my wife. We were deployed together to Guantanamo Bay, Cuba. And we met there, got out of the Navy and got married, lived down here in New Orleans and working in the corporate world and making good money. But, you know, we have 5 kids. So the numbers weren't really adding up. I'm like, honey, look. You know, I'm making good money. She's a nurse. You're making good money, but the numbers aren't really adding up. I mean, we're going to be retiring in our 60s. So I started looking for other avenues. I met a guy through work that was buying lots and building new houses. He was a contractor. So I was like, man, will you partner with me? He's like, sure, man. If you find a deal and buy the lot, we'll split the profits. So started doing that. Finally found a lot off of Craigslist. And worked out perfectly and did that for I think I did about 6 deals doing that. But taxes are high, short-term capital gains. You know, you're getting big windfalls, but there's a lot of taxes too. So the next iteration was, okay, how do I keep more of the money? How do I get some cash flow? And that's, of course, what got me into multifamily is that fact. So being from the finance, I'm chief financial officer, healthcare chief financial officer by trade. So I can underwrite really well. Start underwriting, meeting sponsors, going to conferences, and just started investing a little bit in their deals, using my retirement fund.
Getting your feet wet like that.
Getting my feet wet. Yeah, getting my feet wet. And then started doing that in 2018. And then a couple months ago, finally closing my first deal as a general partner. So really pumped about that.
Awesome. That's exciting. And talk to me a little bit about, and we will get to how you did your first deal later in the podcast, but talk to me how you were able to use your retirement fund to invest in these deals for listeners who are perhaps questioning how to structure something like that using their retirement funds.
Sure. So I've done it both ways. There's 2 ways to do it. So I left the job I was at as a chief financial officer. So I was able to do a direct rollover, right, of my retirement fund. So usually rollover, they would call Edward Jones or somebody like that and then roll it over there. Well, I was deep into learn about multifamily. So they had a company, Equity Trust, and you could roll over into a self-directed IRA. So I rolled all my money into a self-directed IRA and got the deal. And then they kind of help you through it. I mean, there's a little bit of paperwork, you know, to do a deal, but I invested through that self-directed IRA.
That's awesome.
Then it is awesome. But then little did I know, I learned about UBIT taxes, which is unrelated business income taxes. So if you're using a self-directed IRA, and I'm not a tax advisor, not a financial advisor, we got to say that, right?
Talk to your own financial
right.
advisor.
Right. Please check with your own accountant and everything.
Yes.
But whenever a sponsor is going to buy a deal and they use leverage, your retirement account, your self-directed account could be subject to unrelated business income tax. Right. And the whole reason why we use the retirement fund is so we don't have to pay taxes on the gain. So kind of ran into that. Haven't had to pay UBIT taxes yet, but when there is a sale, there's a possibility I could have to pay UBIT taxes. My retirement fund will have to pay that.
Right.
Which gets me to the other way to do it, which I had an S Corp, which is S Corp business when I was flipping houses through. So being an S Corp and having your own business, you can have your own qualified retirement plan. So if you have a qualified retirement plan, not subject to unrelated business income tax. So
okay,
rolled the money over from the money that I had that wasn't in a deal, rolled that money over into a qualified retirement plan, which I use EQRP. And, you know, we can probably get the listeners some kind of access to that, a link or something to look at that, but no unrelated business income tax. And it's more like a checkbook. So I have a bank account and then I could just tell them where to send the money.
Okay.
Yeah.
Could that be used for your own deals, or you got to partner with someone and invest in their deals?
Yeah. You can't partner with your retirement account, which everybody wants to do, but you can't partner with your own retirement account, which is so great about having a good network because you can invest in someone else's deal. They can invest in your deal with their retirement account. So that's what, you know, goes into how important a network can be.
That's good. So yeah. And I have heard the term before, but I don't quite understand much of how it works. EQPR, is it the same as a self-directed IRA?
No, a self-directed IRA it's like a custodian. Think of it like Edward Jones, but they allow you to self-direct your investments. If you were like an Edward Jones, you have a financial advisor kind of, hey, we're going to put you in this or that. Self-directed means just that, self-directed. So you send a deal, it could be multifamily syndication or private lending. You can lend to, because I do that also. I do private lending to wholesalers and fix and flip guys and gals. I do that too and make some money that way. It's more short-term money too.
Yes.
So your money's not tied up.
That's good. And what got you interested in larger deals? Because I'm sure you see the checks from the flips and wholesaling, maybe if you do some of that, and it's like becomes addicting. But why go for the larger units and syndications?
Basically just a legacy for my family, getting to a point to where that cash flow that's coming in is more than my W-2 income. So then you can finally do real estate full time. So it's not really a short-term gain, but it's a long-term gain. And it's just so powerful because think about when you own a rental property, just one rental property, right? So you go, you buy a duplex and somebody's paying that down for you. Well, they're paying a little bit at a time. So if it's a $200,000 property, if it's paid off, then you have $200,000, right? And you can sell it and got $200,000. But imagine it's 50 million. If it's 50 million and you own a portion of that, even 10, 15% of that, and that gets paid down over 10, 15 years. That's a lot of equity.
That is a lot of equity. Yeah.
Yeah. So that's what kind of got me into that.
Good. Someone that Tim Bratz, who was in my podcast before, share, and it was a good analogy. He was like, would you rather have 100% of a grape or a small percentage of a watermelon? And I was like, wow. Yeah, that small percentage of a watermelon does pay off great over time.
Right. And he's my mentor. He's someone where I went to his Commercial Empire event. That's where I met my current partners. And oh, true. A lot of people think, and myself included, you want to get into a deal and you want all of it, right? And looking at it that way is very limited. You have to partner with other people. You have to give that equity up, but you're giving the equity up, but you're getting so much more in return in the future. Not only the amount of money a big deal can do, but just the relationships and the partnerships, the people you meet along the way to be able to do bigger and bigger deals. And eventually our kids are going to be doing deals together. That's what's the beauty of it too.
Yeah. It just reminds me of the conversation we were having before we started recording about being a solopreneur and partnering with others. It's like, yeah, you're giving up some of the equity, whatever, but you're also freeing up your time to be able to tackle other projects or look for other deals.
Right. It's so important. And I ended up partnering with another group on this deal that I just closed. And it's awesome. I mean, they have more units than I do, and I get to learn from them and partner with them on another deal or not, or go off on my own and do another deal. So it's awesome. The partnerships is where it's at in the network.
That's good. So tell us about this first syndication that you did. How was it to find the deal, put it under contract, and management?
Wow. So this deal I've been working with now, Tim Bratz, he's really big on direct to seller, and which that's where you get a lot of the unicorn deals. Well, I've been working with a broker for 4 years, same broker local here. And at first, he wouldn't give me any off market deals, but every deal he would send me, I would underwrite the deal and give him feedback on. So after 3 years, he started giving me shots at off market. And then finally, it must have been, about 8-9 months ago, he brought me this deal, and I was probably one of very few that got to look at it. And as soon as you underwrite something and the numbers finally work, it's like you can't believe it, And
yeah.
So you just like jump on it. So like I called the guys I was going to partner with and put the LOI in as quickly as we could and got it under contract, I guess, like a week later, and then just started due diligence, right? So went down there, walked every unit. It's actually 123 units, 48 units down hard. So
okay,
we got it at a great basis, but we have to put a lot of money into it. So we walked all those units, scoped the lines. I always want to scope the sewer lines, see what's going on there. That was good. The roofs are in decent condition, but we're going to change all of that. So we're going to change the roofs, exterior, in total reno of 48 units, and then as we turn the other ones, renovate those too, to where your expenses go down too. So
yes. And the tenants see that, and they're more willing to accept the rent needs to be increased to bring down to market value. I don't know if that was something that you guys saw as an opportunity to increase the cap rate.
Right. Well, yeah, the way you underwrite is the way we were underwriting the deal. Since we got at such a low basis, once we stabilize the property, we're going to be able to refinance and then give all the initial investors all of their 100% of their money back in like 2 years. So
good.
Yeah, it's really a great deal. And when the tenants see that you're doing the exteriors and really giving the property some love, they're not going to mind. We've already, on the new leases we've done on classic units, not even the ones that we've renovated, we're already over our performer. So it's it's going to be a good deal.
Good. And what do you feel like is in store for you down the line? Are you looking to do more deals like that as a general partner?
Yeah, definitely. I'm out of limited partner money. So all that money's out. So yeah, general partner, I'm looking to do more deals, bigger deals, partner with the guys that I partner with, other partners, really looking at, I'm a solopreneur right now. I just hired, like I was telling you, I just hired a virtual assistant starting to kind of help me with some tasks so I can focus more on talking to brokers and talking to investors. But yeah, I mean, I'm looking for a partner too, like a real partner, to where it's like me and that person, and then we're kind of growing the business too. So
that's good. How did you get past? I know you kind of mentioned a little bit about it. Like once you see the numbers, you're like, you know what, it clicks. How did you get past those limiting beliefs or even self-doubt? What helps you get past that? Because I'm sure a lot of listeners are like, oh, I see people doing these deals, but I have these limiting beliefs that are stopping me from taking that step. What helped you do that?
Well, I mean, over the years, the limiting beliefs, and everybody fights those every day. But you can listen to podcasts about mindset. You can read inspirational stuff, but really being around other people that are positive and being around other people that have done what you want to do is so inspiring, because all those obstacles that you run into, they've already busted through them. So usually whenever you would go to quit, right? So people, you may educate themselves, buy a multifamily course, and then they start underwriting, and then they run into an obstacle. That's when people usually quit. But if you have somebody that you can call to be like, hey, I ran into this, what did you do? Oh, this is what we did. then it helps you bust through those obstacles, which it helped me a lot. It's just having really the network and having people that's done it before gives you that confidence. So when I'm putting the LOI in, but I'm partnering with guys that's already done it, already raised the money, already done those types of things. So that's what helps. You can't do it alone. Don't try and go at it alone, because you'll end up, there's a possibility you'll end up wanting to quit, and it's easy, especially if you're around people that are saying, oh yeah, quit. I knew it wouldn't work. Maybe family, friends, who knows? You just got to be around those people that are not going to give up either.
Yeah, that's good. And the more that you surround yourself with A players, people that have done it, the faster that you're able to get to your deadline or your goals. Yeah.
Right.
So 5 kids, you had your W-2 job, dabbling into real estate. How do you go about time management? What would you advise people that feel like they can never make time for this? What would you say?
Right. Well, let's be honest. Time, everybody has time. It's a choice. So if you work in a 9 to 5 and you get home and you have 5 kids and you might be tired later on in the evenings, but a lot of people watch another 2 hours of Netflix. Okay. So saying you don't have time is, I'm busy, and thank goodness for my wife. That helps out a lot. She's the rock, right? So you have to grind at night. If you're a night person, you got to stay up at night. Or if you're a morning person, you got to wake up early in the morning, or weekends. Until you can get to that point to where that passive income is replacing that earned income or W-2 income to where you can do it during the day.
Are there different principles or philosophies that have helped you hit real estate singles, doubles, or even home runs, whether it be mindset or, again, attending masterminds like you mentioned with the commercial empire, surrounding yourself with the right people, JVing, anything you would like to share about that?
Right. Pay for proximity. And let me go into that a little bit. So if you're going to raise money, and I'm a golfer, if you're hanging out at the municipal course, and are you going to be able to raise money at the public course, or are you going to maybe pay to join a club to where you have business owners and those things? So paying for same thing when you go into a master class, joining a mastermind, you're paying proximity. You're paying for the people that can partner with you. You're paying with the people that's done it. You're building those relationships with them. Then you can call them their cell phone number. And believe me, everybody that's a little bit further along than you are, what I found is they always want to help the people that are trying to get there too.
That's good. Any 2 other tips that you would share along those lines?
Identify what you're good at, identify what you're not good at, and then partner or hire what you're not good at. And then your craft. If it's multifamily, learn how to underwrite deals. If you can be a limited partner, you have to underwrite the deals. There's a lot of people out there with calculators, and you don't have to be an Excel expert with some of these calculators, but going through looking at a market, how to identify a decent market, how to identify the different classes of properties, A, B, C, and D properties. You got to know the lingo. You got to know those things. So, and it'll build some confidence too. Build some confidence in you also, to where whenever you're at a conference or a mastermind or something, you at least know a little bit about what you're talking about. Or when you're talking to a broker, you don't want to call a broker because they know you're a newbie. They're going to ask for proof of funds.
Yeah. You know what you're signing up for. Can you fund this deal? And time is taken during that time. And
right.
If we're not able to provide those proof of funds and execute, someone else is going to come and take the deal.
I've never had a broker ask me for proof of funds. I call them. I don't even let them speak. I'm like, hey, here's my criteria. We're looking to expand into that market. We can go up to 30 million. Just wanted to reach out and kind of build a relationship with you. If not now, maybe later we can do some business together. Oh, okay. No
big deal. Yeah. Are you looking to expand other markets outside of Louisiana, or just staying there for now?
The Southeast, of course, and the Midwest has probably the best cash flow right now. So, I'm looking in the Panhandle, Alabama, Mississippi, Georgia. But a lot of other people are looking there too. So, looking a little bit at the smaller markets, as long as there's maybe 100,000 people or more, maybe there's not as much competition. Your institutional money won't be in those markets. You won't have to, because the bigger ones, maybe over 150 units, you got 1031 money swooping in, paying more, or you have somebody with a different blended cost of capital, which means if I'm raising money from someone, from a credit investors, and I'm getting them 15, 20% return, well, The next person might be connected to a hedge fund that they only want to do capital preservation, only want 5. So, I mean, they can pay more for the deal.
Because they're not running against time and having to pay those investors the high interest.
Right, right. So we look for the deals that's heavier value add, more risk, more reward, not even more risk. I mean, really, you're mitigating the risk by, hiring a good property management company with a construction arm, by really by buying it right, not overpaying for the deal. Is that enough? Don't overpay just to get into a deal, because the people that are at most risk are your investors. And they're first in line is those investors, and protecting their money and getting them a return. And then if you do everything right, then you will get a return.
That's good. I see, since we're doing this video interview now, but this will be available in audio. I see you have the 4-Hour Workweek book by Tim Ferriss back there. It's a great book. Are there any books or recommendations that you have for listeners?
I mean, I started with Rich Dad, Poor Dad, and I've been having Rich Dad, Poor Dad since I was in college. So I knew I kind of had a bug for it. Then I put it down, and then I picked it back up and read it. Think and Grow Rich by Napoleon Hill is good. The Magic of Thinking Big, but I think David Schwartz is really good also.
I have never heard of David Schwartz, but we'll have to check him out. I have heard of the other ones and read some of them. Yeah.
I'm a big mindset guy, because your limits in life is between your ears. So if you can get your mindset right and get around the right people, you can make big things.
That's good. Is there anything that I maybe should have asked you during this interview that I missed? If you were the one interviewing Trenton Bussey.
Just to talk about a setback or kind of a failure of mine in 2019, I'm a healthcare administrator, chief financial guy by trade, right? So it's like, okay, well, I'm going to go into residential assisted living. Found a piece of land to build 3. We call them parishes here, like our county in the rest of the United States. Got all the approvals. I knew the people at the state because I'm in healthcare. So I qualified for license, all of that. Got all of that together. Got renderings done, everything. The deal was a slam dunk. And I couldn't raise the money. And the reason why I couldn't raise the money is I was looking at how to raise the money. How do I raise the money? How do I raise the money? Instead of who can help me raise the money? I was looking at how I could do it. So I was making calls, and I think I needed like $1.4 million. I think I got somebody like, oh, I'll give you like 50,000. And then I just couldn't raise the money. Not that I didn't know what I was doing or anything, but I hadn't raised money before. So if you are going to raise money, you have to always build those relationships before you have a deal, right?
That's good.
Because you can't just call someone out the blue. Like, hey, we've never talked. I've seen you close some other deals, and I see you raise money. I got this great deal. Well, that's great. No, they don't know you. They don't trust you yet. They don't even know if they will like you enough to do business with you, because you want to partner with people you like. You don't want to be partnered with people you don't like. So that was a big failure. That was a big crushing blow, because I got really close, but then it just fell apart. And now it's by my house. I pass that land all the time, and they built 3 single family homes right there. But that's where I learned not to do it on your own. You got to ask who, not how.
That's good. It's a relationship-based business.
It's everything. It's really everything.
So how can people stay in contact with you, learn about what you're up to? I know you also have a Facebook group for multifamily, if you want to share that too.
Sure. Yeah, I do have a Facebook group. It's Multifamily Wealth Factory. I'm going to be eventually teaching some things on there. You can follow my journey. I go down to the property. We just started renovations a couple weeks ago. So that's kind of starting to gear up. So follow me there. We can see what happened, what obstacles I run into, and how we solve them. So yeah, please join the group if you're interested in that. I also have a website, www.tlbstrategic.com. But I do most of my on Facebook, on LinkedIn. I'm on LinkedIn. I'm on Facebook, Instagram. I'm not hard to find. There's not many Trent Busseys out there.
Yeah, awesome. Hey, it was a pleasure hosting you. Thanks for joining me and sharing with my audience.
Yeah, definitely. It was a pleasure. Thank you for letting me come on and sharing a little bit of my journey. And then don't give up. People out there, don't give up.
We hope you enjoyed this interview and got some value out of it to help you in your real estate investing journey. If you can take just a minute, please do us a favor and leave a review. Hit the like button on iTunes or whatever platform you listen to our podcast on, and subscribe so you can hear future episodes. Also, don't forget to check out our Real Estate Home Runs Podcast Community Facebook group, where you are able to connect with some great listeners. If you're an investor who is crushing it and want to share some information centered around passive income in real estate, please contact us. Hit those home runs, and we will see you next time.